Everyone's talking about Texas, Florida, and North Carolina, but while the crowd chases those obvious markets, savvy investors are quietly making moves in 5 states that are completely flying under the radar. These are the hidden gems, states where the fundamentals are strong, prices are still reasonable, and the competition is minimal. Today, I'm going to reveal 5 states that most investors aren't paying attention to, but should be. These aren't declining Rust Belt cities or risky markets. These are states with real economic growth, improving demographics, strong rental demand, and genuine appreciation potential. For each state, I'll show you why it's a hidden gem, what the investment opportunities are, what the numbers look like, and how to get started. Whether you're looking for cash flow, appreciation, or both, these markets offer something special. Let's uncover these hidden gems. State number 1, Indiana. First up, a state that most people drive through but never consider. Indiana, the overlooked Midwest powerhouse. When people think real estate investment, Indiana rarely comes to mind, and that's exactly why it's a hidden gem. Why Indiana is a hidden gem? 1. Incredibly low entry prices. Indianapolis, a metro of over 2 million people, has median home prices around $250,000 to $280,000. That's half what you'd pay in Nashville, Charlotte, or Austin for comparable metros. But here's the key. Prices are low, but the market is stable and growing. You're not buying into a declining area, you're buying into an improving market at the ground floor. 2. Strong, diverse economy. Indiana's economy is much stronger than people realize. Pharmaceutical and life sciences. Eli Lilly is headquartered in Indianapolis and is one of the largest pharmaceutical companies in the world. The company has been expanding massively, announcing billions in new investments. Technology hub. Salesforce has a major hub in Indianapolis. Infosys, DXC Technology, and dozens of tech companies have operations here. Indianapolis is quietly becoming a tech center. Manufacturing. Indiana remains a manufacturing powerhouse with automotive, Subaru, Toyota plants, RV manufacturing. Elkhart is the RV capital, steel, and advanced manufacturing. Logistics. Indiana's central U.S. location makes it perfect for distribution. Amazon, FedEx, and countless companies have massive warehouse operations here. Population growth is turning positive. For years, Indiana had slow population growth, but recently that's changed. Indianapolis Metro is now growing steadily as people discover the affordability and job opportunities. Remote workers from expensive states are relocating here, bringing California and New York salaries to Indiana cost of living markets. Lowest property taxes in the nation. Indiana's average effective property tax rate is around 0.8%, one of the absolute lowest in America. On a $250,000 home, that's just $2,000 annually. Compare that to Texas, 2% plus equals $5,000 annually, or New Jersey, 2.5% plus equals $6,250 annually. This dramatically improves your cash flow on rental properties. Landlord-friendly laws. Indiana has reasonable landlord-tenant laws. Eviction processes are efficient, there aren't excessive tenant protections that hamstring landlords, and regulations are manageable. Strong rental market. Indianapolis has multiple universities, hospitals, tech companies, and a young professional population that rents. Rental demand is strong across all price points. The numbers. Median home price, $250,000 to $280,000, Indianapolis Metro. Average rent, $1,400 to $1,700 for 3BH home. Gross rental yield, 6 to 8%. Property taxes, 0.8% effective rate. Appreciation, 4 to 6% annually, steady, sustainable. Days on market, 30 to 45 days, healthy market. Population growth, plus 0.5 to 1% in metro areas. Investment opportunities. Indianapolis core neighborhoods. Fountain Core, artsy, revitalizing neighborhood, young professionals. Broad Ripple, near Butler University, rental demand from students and young professionals. Irvington, historic homes, strong community, appreciation potential. Mass Ave area, urban living, walkable, higher-end rentals. Indianapolis suburbs, Fishers, consistently ranked as one of America's best places to live, excellent schools, tech jobs, strong rental demand. Carmel, upscale suburb, higher prices, $350K to $400K plus, premium rents. Noblesville, growing rapidly, good schools, affordable. Greenwood, South Side growth, very affordable entry. Other Indiana markets. Fort Wayne, second largest city, even cheaper than Indy, manufacturing and healthcare jobs. Bloomington, Indiana University, college town, consistent rental demand. Lafayette, Purdue University, stable college market. Investment strategies that work. Single-family rentals. Buy 3BH, 2BH homes in $180,000 to $250,000 range. Rent for $1,400 to $1,700. With 20% down in typical financing, these should cash flow $200 to $400 monthly after all expenses. Small multifamily. Duplexes and fourplexes in Indianapolis neighborhoods can be purchased for $200,000 to $350,000. Live in one unit, house hack, or rent all units. Strong cash-on-cash returns. Value-add flips. Indianapolis has older housing stock. Buy distressed properties for $100,000 to $150,000. Invest $40,000 to $60,000 in renovations. Sell or rent at updated values. What to watch out for. Weather. Cold winters with snow and ice. Factor in heating costs and snow removal. Neighborhood selection. Like any market, location matters. Some areas are declining while others are improving. Do thorough research. Property condition. Older housing stock means potential maintenance issues. Get thorough inspections. Manufacturing dependence. While diversifying, Indiana still relies heavily on manufacturing. Economic downturns can impact the market. Why this is a hidden gem? Indiana doesn't have sexy beaches or mountains. It doesn't have the cachet of Austin or Miami. But for investors focused on numbers rather than lifestyle, Indiana offers low entry prices, strong cash flow potential, low property taxes, improving economy, and minimal competition from other investors. Bottom line, Indiana is the definition of a hidden gem. Solid fundamentals, affordable prices, and largely ignored by the investing crowd. Smart investors are quietly building portfolios here. State number 2, Georgia, outside Atlanta. Next, a state everyone knows, but most investors are looking in the wrong places. Georgia, beyond the ATL. Everyone knows Atlanta. It's expensive, competitive, and obvious, but Georgia has hidden gem markets throughout the state that offer exceptional value. Why Georgia outside Atlanta is a hidden gem? 1. Secondary cities are booming. While investors fight over Atlanta properties, Georgia's secondary cities are quietly experiencing strong growth. Augusta, home to Fort Eisenhower, formerly Fort Gordon, growing cybersecurity and tech sector, Masters Tournament, medical college. Savannah, tourism, port city, massive shipping, SCAD art school, historic charm, growing remote worker destination. Columbus, Fort Moore, formerly Fort Benning, strong military presence, affordable, stable rental market. Macon, Central Georgia, very affordable, Mercer University, healthcare sector, warehousing and logistics. Athens, University of Georgia, consistent rental demand, college town stability. Film and entertainment industry. Georgia offers massive tax incentives for film and TV production. Atlanta is the third largest production center in America behind LA and New York. This creates jobs, not just for actors, but for construction, catering, transportation, hospitality. These workers need housing. Port of Savannah growth.
The Port of Savannah is one of the fastest growing ports in America. It's now the 4th largest port in the nation. This creates logistics, warehousing, and distribution jobs throughout coastal and central Georgia. 4. Military presence. Multiple major military bases, Fort Moore, Fort Eisenhower, Robins Air Force Base, Marine Corps Logistics Base, provide stable employment and consistent rental demand. Military renters are ideal. They have guaranteed income, are professionally screened, and relocate frequently, creating turnover opportunities. 5. still affordable. While Atlanta Metro has gotten expensive, Georgia's secondary cities remain very affordable. Augusta, $200,000 to $225,000 median. Macon, $170,000 to $190,000 median. Columbus, $200,000 to $220,000 median. Savannah, $280,000 to $320,000 median, higher due to tourism appeal. 6. No state income tax on retirement income. Georgia doesn't tax Social Security and offers exemptions on other retirement income. This makes it attractive to retirees, creating demand for housing. The numbers. Augusta, median home price, $200,000 to $225,000. Average rent, $1,200 to $1,500 for 3BR. Gross rental yield, 7 to 9%. Population growth, stable to slightly growing. Military drives consistent demand. Savannah, median home price, $280,000 to $320,000. Average rent, $1,800 to $2,200 for 3BR. Gross rental yield, 6 to 8%. Tourism creates short-term rental opportunities. Appreciation potential due to lifestyle appeal. Macon, median home price, $170,000 to $190,000. Average rent, $1,100 to $1,400 for 3BR. Gross rental yield, 8 to 10%. Value-add opportunities abound. Investment opportunities. Military housing near bases. Buy single-family homes near Fort Moore, Columbus, Fort Eisenhower, Augusta, or Robins AFB, Warner Robins. Rent to military families. Consistent demand, professional tenants, stable income. College rentals. Athens, University of Georgia, and Savannah, SCAD, offer student rental opportunities. Buy near campus, rent by the room, strong cash flow. Requires more management but higher returns. Savannah short-term rentals. Savannah's tourism creates vacation rental opportunities. Buy in historic district or near beach, Tybee Island. Rent on Airbnb or VRBL. Research regulations carefully. Some restrictions exist. What to watch out for? Hurricane risk in coastal areas. Savannah and coastal Georgia face hurricane risk. Factor in insurance costs. Summer heat and humidity. Georgia summers are hot and humid. Cooling costs are significant. Property taxes. Georgia property taxes are moderate, around 0.9 to 1.1% effective rate, but can vary significantly by county. Neighborhood selection. Like any state, location matters tremendously. Some areas are declining while others are improving. Short-term rental regulations. Savannah has implemented some short-term restrictions. Research thoroughly before buying for vacation rentals. Why this is a hidden gem? Everyone focuses on Atlanta, which is expensive and competitive. Meanwhile, Georgia's secondary cities offer much lower entry prices, strong rental demand from military, students, port workers, less investor competition, similar economic drivers, Atlanta's growth benefits the entire state, multiple investment strategies work. Specific markets to target. Best for cash flow, Macon, Augusta. Best for appreciation, Savannah, Athens. Best for military rentals, Columbus, Augusta. Best for college rentals, Athens. Best for vacation rentals, Savannah, Tybee Island. Bottom line, Georgia beyond Atlanta is a massive hidden gem. Multiple strong markets, diverse economic drivers, affordable prices, and minimal attention from the investor crowd. Smart investors are building portfolios in these secondary cities. State number 3, Alabama. Transition. Now let's talk about a state most investors completely overlook. Alabama, the Rocket City and beyond. Alabama rarely appears on investor radar. Most people think Old South, declining economy, and pass it by. That's a huge mistake. Why Alabama is a hidden gem? 1. Huntsville, the Rocket City boom. Huntsville is one of the most underrated markets in America. Here's why it's exploding. NASA and space industry. Marshall Space Flight Center, NASA's primary rocket development center. Redstone Arsenal, major Army installation. SpaceX has operations here. Blue Origin is building facilities. Dozens of aerospace contractors. The space industry is booming and Huntsville is at the center of it. Defense and technology. Boeing, Lockheed Martin, Northrop Grumman, Raytheon, all major defense contractors have significant operations. Cybersecurity and IT companies, engineering firms. Huntsville has one of the highest concentrations of engineers per capita in America. These are high-paying jobs that create housing demand. Population growth. Huntsville is one of the fastest growing cities in America, with population growth of 2% annually. People are moving here for jobs. Home prices still reasonable. Despite rapid growth, Huntsville median home prices are around $280,000 to $320,000. Compare that to similar tech aerospace markets like Austin, $550K plus, San Diego, $900K plus, or Seattle, $700K plus. You're getting similar economic drivers at a fraction of the price. 2. Birmingham's revitalization. Birmingham, once a steel town, has transformed. Healthcare hub. UAB Medical Center is one of the largest employers in the state. Healthcare, biomedical research, and life sciences are booming. Banking and finance. Regions Bank is headquartered here. Banking, insurance, and professional services provide stable employment. Urban renewal. Downtown Birmingham has undergone significant revitalization. New restaurants, entertainment venues, and residential developments are transforming the city. Affordability. Birmingham median home prices are around $220,000 to $250,000. You can buy quality properties at reasonable prices. 4. Lowest property taxes in America. Alabama has some of the lowest property taxes in the entire nation, around 0.4% effective rate. On a $250,000 property, that's just $1,000 annually. This is a massive cash flow advantage, compared to Texas at 2%, $5,000 annually, or Illinois at 2.3%, $5,750 annually. Low cost of living. Beyond housing, Alabama offers very low cost of living. Low income taxes, no sales tax on groceries, affordable utilities, low insurance costs except coastal areas. The numbers. Huntsville, median home price, $280,000 to $320,000. Average rent, $1,600 to $2,000 for 3BR. Gross rental yield, 6 to 8%. Population growth, 2% annually. Job growth, strong, tech aerospace driven. Appreciation, 6 to 10% annually, recent years. Birmingham, median home price, $220,000 to $250,000. Average rent, $1,300 to $1,600 for 3BR. Gross rental yield, 7 to 9%. Healthcare sector provides stability, urban revitalization creating opportunities. Montgomery, median home price, $190,000 to $210,000. Average rent, $1,200 to $1,500 for 3BR. Gross rental yield, 8 to 10%. State capital, stable government employment, military base rental demand. Mobile, median home price, $210,000 to $240,000. Port city, shipping and aerospace, Airbus plant. Beach access, Gulf shores nearby. Hurricane risk consideration. Investment opportunities. Huntsville growth play. Buy in growing suburbs, Madison, Harvest, Hampton Cove. These areas are seeing rapid development. Purchase single-family homes or townhomes, rent to professionals. Strong appreciation potential plus cash flow. Birmingham value add. Birmingham has older housing stock in transitional neighborhoods. Buy distressed properties in improving areas like Avondale, Woodland, or Highland Park. Renovate and either flip or hold as rentals. Strong returns possible. Military rentals. Buy near Redstone Arsenal or Maxwell AFB. Rent to military families. Consistent demand, professional tenants, stable income. College rentals. Tuscaloosa, University of Alabama, and Auburn, Auburn University. Buy near campus, rent to students. High cash flow. Consistent demand, requires more management. New construction. Huntsville has active home builders. Buy new construction rentals, lower maintenance, warranties, appeal to tenants willing to pay premium rent. What to watch out for?
Education rankings. Alabama ranks lower nationally in education. However, Huntsville and some Birmingham suburbs have excellent schools. Research carefully if you have kids. Healthcare access. Major cities, Huntsville, Birmingham, and Mobile, have excellent healthcare. Rural areas are limited. Stick to metro areas. Heat and humidity. Alabama summers are hot and humid. Factor in cooling costs. Political/social climate. Alabama is conservative. If you're seeking progressive, cosmopolitan environment, you may find it limiting, though Huntsville is more diverse due to engineering population. Hurricane risk, coastal. Mobile and Gulf Coast areas face hurricane risk. Don't buy coastal properties without understanding insurance costs. Why this is a hidden gem. Most investors never consider Alabama. They have preconceived notions about the South and don't realize what's happening in Huntsville and Birmingham. Meanwhile, those who've discovered these markets are seeing strong appreciation, Huntsville especially, excellent cash flow due to low property taxes, growing high-paying job markets, minimal investor competition, reasonable entry prices. Specific markets to target. Best for appreciation, Huntsville and suburbs, Madison, Hampton Cove. Best for cash flow, Montgomery, Birmingham, Mobile. Best for military rentals, Huntsville, Redstone Arsenal, Montgomery, Maxwell ABF. Best for value add, Birmingham transitional neighborhoods. Bottom line, Alabama is massively underrated. Huntsville is experiencing tech and aerospace boom with prices still reasonable. Birmingham is revitalizing. Low taxes create exceptional cash flow. This is a true hidden gem that won't stay hidden much longer. State number 4, Nebraska. Transition. Next, let's head to the Great Plains for a market almost no one is watching. Nebraska, the stable, consistent cash cow. Nebraska isn't sexy. It's not going to be featured on HGTV, but for investors focused on consistent cash flow and stability, it's a hidden gem. Why Nebraska is a hidden gem? Number 1, Omaha, Warren Buffett's hometown. There's a reason Warren Buffett, one of the world's greatest investors, lives in Omaha. The city has incredible fundamentals. Fortune 500 companies, Berkshire Hathaway, Warren Buffett's company, Union Pacific Railroad, headquarters, Mutual of Omaha, Kiewit Corporation, TD Ameritrade, now Schwab. These companies employ thousands in high-paying jobs. Healthcare hub. Multiple major hospital systems, including the University of Nebraska Medical Center, national leader in infectious disease research. Technology growing. Google has a data center. PayPal, LinkedIn, and others have operations here. Tech sector is small but growing. Financial services. Banking, insurance, and financial companies have significant presence. Affordable entry prices. Omaha, median home prices are around $260,000 to $290,000 for a metro of nearly 1 million people. That's incredibly reasonable for a city with this level of economic activity. Lincoln, state capital, home to the University of Nebraska, has median prices around $250,000 to $270,000. Strong, stable economy. Nebraska's unemployment rate is consistently among the lowest in the nation, often 2 to 3%, which is basically full employment. The economy is diverse. Agriculture and agribusiness, finance, healthcare, insurance, transportation, and technology. This diversity creates resilience. Low property taxes for a Midwest state. Nebraska property taxes are around 1.5% effective rate, reasonable for the region and much lower than many states. Landlord-friendly. Nebraska has balanced landlord-tenant laws. Eviction processes are efficient and regulations are reasonable. Stable, predictable market. Nebraska doesn't boom and bust. It's steady. During the 2008 recession, Nebraska's housing market barely declined while other markets crashed. For investors seeking stability and consistent returns rather than speculative gains, this is ideal. The numbers. Omaha. Median home price is around $260,000 to $290,000. Average rent is $1,400 to $1,700 for a 3BR. Gross rental yield is 6 to 8%. Property taxes are 1.5% effective rate. Appreciation is 3 to 5% annually, steady, sustainable. Vacancy rates are low, 2 to 4%. Days on market, 30 to 40 days. Lincoln. Median home price around $250,000 to $270,000. Average rent is $1,300 to $1,600 for a 3BR. University of Nebraska drives rental demand. State capital provides government job stability. Investment opportunities. Omaha suburbs. Buy in growing suburbs, Papillion, La Vista, Bellevue, Elkhorn. These areas have excellent schools, safe neighborhoods, and strong rental demand for families. Single-family 3BR, 2BA homes in the $230,000 to $280,000 range rent for $1,500 to $1,800 monthly. With 20% down, these typically cash flow $150 to $350 monthly. Lincoln College Rentals. University of Nebraska has over 25,000 students. Buy near campus, rent to students either whole house or by the room. Strong, consistent demand. Football culture. Nebraska Cornhuskers is huge. Game days bring massive influx. Omaha multifamily. Small multifamily, duplex, triplex, fourplex in the $250,000 to $400,000 range. Live in one unit, house hack, or rent all units. Strong cash-on-cash returns. Value-add opportunities. Omaha has older neighborhoods where properties can be purchased below market, renovated, and either flipped or rented at updated values. Corporate rentals. Fortune 500 companies bring in professionals for temporary assignments. Buy nice properties near corporate campuses, rent to corporate assignees on 3 to 6 month leases at premium rates. What to watch out for? Weather. Nebraska winters are cold with snow, summers are hot. 4-season climate means higher utility costs. Slow appreciation. Nebraska doesn't see explosive price growth. Appreciation is steady but modest, 3 to 5% annually. If you need fast appreciation for your strategy, this may not be the market. Limited lifestyle appeal. No beaches, no mountains. Flat prairie landscape. If you need sexy locations to attract tenants, this isn't it, but families and professionals care more about jobs, schools, and safety. Population growth slower. Nebraska's population growth is modest. It's stable, but not booming like Sunbelt states. Why this is a hidden gem? Nebraska offers something rare in real estate investing: predictability and stability. You won't get rich quick in Nebraska, but you'll build steady wealth through consistent cash flow, low vacancy rates, stable appreciation, strong job market, minimal boom-bust cycles. This is the boring investment that quietly outperforms over decades. Investor profile. Nebraska is perfect for buy-and-hold investors focused on cash flow, investors seeking stability over speculation, people building wealth for retirement, those who want to sleep well at night. Nebraska is not for house flippers seeking fast profits, speculators chasing explosive growth, investors who need sexy markets.
Specific markets to target. Best for cash flow, Omaha suburbs, Papillion, Bellevue, La Vista. Best for stability, anywhere in Omaha Metro. Best for college rentals, Lincoln near University of Nebraska campus. Best for corporate rentals, West Omaha near corporate campuses. Bottom line, Nebraska is the ultimate hidden gem for investors who value fundamentals over flash. Strong economy, affordable prices, excellent cash flow, and stability that's hard to find elsewhere. Warren Buffett lives here for a reason. State number 5, Arkansas. Transition. Finally, let's look at a state experiencing a surprising transformation. Arkansas, the natural state's unnatural growth. Arkansas might be the most overlooked state in America for real estate investment, but one region in particular is experiencing explosive growth that's creating exceptional opportunities. Why Arkansas is a hidden gem? 1. Northwest Arkansas, the Walmart effect. Northwest Arkansas, Bentonville, Fayetteville, Rogers, Springdale, is experiencing a renaissance driven by one of the world's largest companies. Walmart headquarters. Walmart is headquartered in Bentonville. This means tens of thousands of corporate employees, thousands of vendor companies with offices nearby, P&G, Coca-Cola, Unilever, etc., all have presence. High-paying jobs in retail management, technology, supply chain, finance. Constant influx of professionals relocating for work. Beyond Walmart, Tyson Foods, headquartered in Springdale, major employer. J.B. Hunt, transportation and logistics company in Rogers. University of Arkansas, major research university in Fayetteville. Growing tech scene, startups and tech companies drawn to the area. Number 3, still very affordable. Despite all this growth, Northwest Arkansas remains surprisingly affordable. Bentonville, $310,000 to $350,000 median. Fayetteville, $280,000 to $320,000 median. Rogers, $290,000 to $320,000 median. Springdale, $250,000 to $280,000 median. Compare this to other markets with similar economic drivers: Austin, Seattle, Raleigh, where median prices are $500,000 to $700,000 plus. Number 4, population growth accelerating. Northwest Arkansas is one of the fastest growing regions in America. The metro population has grown over 20% in the past decade and continues to accelerate. Number 5, no state tax on retirement income. Arkansas doesn't tax Social Security or the first $6,000 of other retirement income. This makes it attractive to retirees, particularly from high-tax states. Number 6, Ozark Mountains beauty. Northwest Arkansas sits in the Ozark Mountains. The area is hilly, forested, and beautiful, not the flat Arkansas Delta people imagine. The numbers. Northwest Arkansas. Median home price, $280,000 to $350,000, varies by city. Average rent, $1,500 to $1,900 for 3BR. Gross rental yield, 6 to 8%. Population growth, 2 to 3% annually. Job growth, strong. Walmart ecosystem drives growth. Appreciation, 8 to 12% annually in recent years. Days on market, 20 to 30 days, very competitive. Little Rock, state capital. Median home price, $210,000 to $240,000. Average rent, $1,200 to $1,500 for 3BR. Gross rental yield, 7 to 9%. Government employment provides stability. More affordable than Northwest Arkansas. Investment opportunities. Northwest Arkansas growth play. This is primarily an appreciation play. Buy in Bentonville, Rogers, or Fayetteville. Hold for appreciation as the region continues growing. Single-family homes in good neighborhoods will see strong appreciation as more companies and people relocate here. New construction partnerships. Northwest Arkansas is building rapidly to keep up with growth. Partner with builders or buy new construction properties. Rent to professionals relocating for work. Corporate rentals. Walmart and vendor companies constantly bring in professionals for temporary assignments, 3 to 12 months. Buy nice 3 to 4 bedroom homes, furnish them, and rent them to corporate assignees at premium rates, $2,500 to $3,500 per month. This niche is underserved and highly profitable. University rentals. Fayetteville, University of Arkansas, offers student rental opportunities. Buy near campus, rent to students. Arkansas football culture is massive. Game days bring huge influx. Little Rock cash flow. If you want cash flow over appreciation, Little Rock offers better yields. Buy single-family homes in stable neighborhoods, rent to working-class families. Lower appreciation, but stronger cash-on-cash returns. Vacation rentals. The Ozarks have tourism appeal. Buy properties near Beaver Lake, Buffalo River, or in mountain towns. Rent as short-term vacation rentals. What to watch out for. Market has heated up. Northwest Arkansas was a hidden gem 5 to 10 years ago. It's less hidden now. Competition has increased and prices have risen significantly. Walmart dependence. The region's economy is heavily dependent on Walmart. If Walmart struggles or relocates, unlikely but possible, the market would be impacted. Limited inventory. Strong demand and limited supply mean homes sell quickly. You'll need to move fast on good deals. Property taxes are higher than expected. Arkansas property taxes are around 0.6 to 0.8% effective rate, but on higher home values in Northwest Arkansas, this adds up. Tornado risk. Arkansas is in Tornado Alley. Spring storms can be severe. Factor in storm shelters and insurance. Hot and humid summers. Arkansas summers are hot and very humid. Cooling costs are significant. Why this is still a hidden gem. Northwest Arkansas is becoming less hidden, but it's still overlooked nationally. Most investors don't know about the Walmart ecosystem or the region's transformation. Those who've discovered it are seeing strong appreciation, 8 to 12% annually, growing rental demand from professionals, corporate rental niche with high returns, beautiful lifestyle appeal, much more affordable than comparable markets. Comparison. Northwest Arkansas offers similar economic drivers to Austin, tech or corporate hub, Asheville, outdoor lifestyle, or Raleigh, corporate growth, but at 40 to 50% lower prices. Specific markets to target. Best for appreciation, Bentonville, priciest but strongest growth. Best for balance, Rogers, Fayetteville, growth plus affordability. Best for cash flow, Springdale, Little Rock. Best for corporate rentals, Bentonville, Rogers, near corporate offices. Best for college rentals, Fayetteville, University of Arkansas. Bottom line, Arkansas, particularly Northwest Arkansas, is a hidden gem experiencing transformation. Strong economic fundamentals driven by Walmart ecosystem, cultural renaissance, outdoor recreation appeal, and still reasonable prices. Won't stay hidden much longer. What makes these true hidden gems? Transition. So what did these 5 states have in common? The common threads. 1. Overlooked or underestimated. None of these states get regular attention on investor podcasts, YouTube channels, or real estate forums. They're flying under the radar. 2. Strong fundamentals without the hype. Each state has real job growth, growing or stable populations, diverse economies, reasonable to strong appreciation, good to excellent cash flow potential, but without the media attention of Texas, Florida, or North Carolina. 3. Less competition. Fewer investors competing means better deals available, more negotiating power, less bidding wars, time to evaluate properties carefully. 4. Reasonable entry prices. You can still buy quality properties at prices that actually make sense. You're not paying inflated investor premiums. 5. Multiple investment strategies work. Whether you want cash flow, Indiana, Nebraska, Alabama, appreciation, Arkansas, Alabama's Huntsville, or a balance of both, Georgia, all markets. These states support various strategies. 6. Landlord-friendly environments. All 5 states have reasonable landlord-tenant laws. You're not fighting uphill regulatory battles. How to evaluate hidden gem markets. Transition. Here's how to find your own hidden gems. The framework. Step 1. Look for economic catalysts. Major employers expanding or relocating, military bases, universities, infrastructure investments, ports, airports, highways, industry clusters forming. Step 2. Analyze population trends. Growing populations mean housing demand. Look at where people are coming from. High-income states mean buyers with money. Age demographics. Young professionals versus retirees create different opportunities. Step 4. Evaluate affordability. Compare median home price to median income. Calculate price-to-rent ratios. Look at total cost of ownership. Taxes, insurance, utilities. Step 5. Research regulatory environment. Are landlord-tenant laws balanced? Are there rent control measures? Are
How efficient are eviction processes? Are there excessive regulations? Step 5. Assess competition. How many investors are active in the market? How quickly do properties sell? Are there bidding wars? Can you find deals? Step 6. Visit and verify. Don't invest sight unseen. Visit the market. Drive neighborhoods. Talk to locals. Verify what you've learned online. Investment strategies for hidden gems. Here's how to invest in these markets. Strategy number 1. The first mover advantage. Get into hidden gem markets before they become obvious. This is where the biggest gains happen. How? Research emerging markets continuously. Look for early signals, population growth ticking up, major employer announcements, infrastructure investments.
Buy before prices surge, hold for appreciation as the market discovers the area. Strategy number 2, cash flow focus. Hidden gem markets often offer better cash flow than hot markets because prices haven't been bid up yet. How? Buy single-family homes or small multifamily. Focus on positive cash flow from day one. Don't rely on appreciation. Build a portfolio generating monthly income. Strategy number 3, value-add plays. Hidden gem markets often have older housing stock with value-add potential. How? Buy distressed properties below market value. Renovate strategically. Focus on high ROI improvements. Either flip for profit or hold as improved rental. Rinse and repeat. Strategy number 4, niche markets. Hidden gem markets often have underserved niches. Examples: corporate rentals in Indiana, Arkansas; military housing in Alabama, Georgia; college rentals in Nebraska, Arkansas, Georgia; vacation rentals in emerging tourism areas. How? Identify an underserved niche, position your property to serve that market, command premium rents due to limited competition. Strategy number 5, buy and hold forever. Hidden gem markets with strong fundamentals are perfect for legacy portfolios. How? Buy quality properties in good locations. Hold for 20 to 30 years. Enjoy cash flow and appreciation. Pass to next generation as wealth-building assets. Mistakes to avoid. Don't make these costly mistakes. Mistake number 1, waiting for proof. By the time a market is obviously hot and everyone's talking about it, you've missed the best opportunities. Hidden gem markets require conviction before consensus. Smart move. Do your research, verify fundamentals, and act while others are skeptical. Mistake number 2, buying in the wrong neighborhood. Every market has good areas and bad areas. In hidden gem markets with limited information, it's easy to buy in declining neighborhoods. Smart move, visit in person. Drive neighborhoods at different times of day. Research crime stats, school ratings, and employment centers. Mistake number 3, underestimating costs. Property taxes, insurance, utilities, and maintenance, these vary significantly by state and property. Smart move, get actual quotes and bills before buying. Calculate all-in costs. Mistake number 4, not building a local team. Out-of-state investing in lesser-known markets requires strong local partners. Smart move, build relationships with local real estate agents, property managers, contractors, and inspectors who know the market. Mistake number 5, following outdated data. Hidden gem markets can change quickly. Population trends, major employer moves, or policy changes can shift fundamentals rapidly. Smart move, stay updated. Join local Facebook groups, read local news, and monitor market data continuously. Mistake number 6, ignoring quality of life. Even in cash flow markets, quality of life matters for tenant quality and retention. Smart move, buy in areas where you'd be comfortable living. Better neighborhoods equal better tenants equal less headaches. Action plan. Here's exactly what to do next. Step 1, choose one market. Don't try to invest in all 5 states. Pick one to focus on initially. Want cash flow? Indiana or Nebraska. Want appreciation? Arkansas, NWA, or Alabama, Huntsville. Want balance? Georgia secondary cities. Want stability? Nebraska. Want growth? Alabama or Arkansas. Step 2, deep dive research. Spend 2 to 4 weeks learning everything about your chosen market. Read local news sources daily. Join local real estate investor Facebook groups. Study market reports from Zillow, Redfin, local MLS. Analyze major employers and economic drivers. Analyze population and demographic trends. Step 3, build your team. Before buying, assemble your team. Real estate agent, investor-focused. Property manager, if out of state. Lender, experienced with investment properties. Home inspector, contractor, insurance agent. Interview multiple candidates for each role. Check references. Step 4, visit the market. Book a trip. Spend 5 to 3 days meeting your team in person, driving neighborhoods, viewing properties, talking to locals, getting a feel for the area. This trip will be worth 100 hours of online research. Step 5, analyze deals. Start running numbers on properties. Analyze 20 to 50 deals before making an offer. Learn what good deals look like in your market. Step 6, make offers. Don't be afraid to offer below asking price, especially in slower markets. The worst they can say is no. Step 7. Execute and close. Once you buy, execute your strategy. Get the property rented, renovated, or whatever your plan is. Step 8. Evaluate and adjust. After your first deal, evaluate. What went well? What would you do differently? Are the numbers working out as projected? Use these learnings for deal 2. Step 9. Scale gradually. Don't rush. After successfully completing 1 to 2 deals, you can consider expanding. Step 10. Share your knowledge. Once you've established yourself in a hidden gem market, share what you've learned with other investors. Build community. Everyone wins. Hidden gem markets are where fortunes are built in real estate. Not in the obvious markets everyone's chasing, but in the overlooked places where fundamentals are strong, prices are reasonable, and competition is minimal. Indiana, Georgia's secondary cities, Alabama, Nebraska, and Arkansas, these 5 states offer genuine opportunities for investors willing to look beyond the hype. Will they be as sexy as buying in Miami or Austin? No. Will your friends be impressed? Probably not. But will they build wealth consistently and reliably? Absolutely. The best investments are often the boring ones nobody's talking about. These 5 hidden gems prove it. The question is, are you going to follow the crowd to the obvious markets, or are you going to be strategic and invest where the smart money is quietly going? If this video opened your eyes to new opportunities, please give it a thumbs up and subscribe for more real estate investment insights. Drop a comment below. Which of these hidden gem states interests you most? Have you invested in any of them? I'd love to hear your experience. Thanks for watching. Now go find your hidden gem and start building wealth. I'll see you in the next video.